Welcome to the European Market Open. We're a minute to go before the start of your cash equity trading under pressure, and we have been pretty much for the past couple of hours since that escalation of risk. Your top stories: escalation. President Putin recognizes two breakaway republics in eastern Ukraine and says Russia will deploy what he calls peacekeeping forces. US and European leaders condemn the move, and talk turns to sanctions. Markets recoil, global stocks tumble, while treasuries and oil climb. The Russian ruble slumps. Plus, billion-dollar buyback boost. HSBC ups its plans to return billions to investors as profits jump. We hear exclusively from the CFO. European equity futures, as I say, are on the back foot, led lower by a whole risk of narrative across the world. We have a torpedo in the peace talk process, according to various analysts. From the futures to the cash, let's see how those markets are opening. Tom is with me. Tom, a pile of risk, and to quote the UN ambassador to the US ambassador, Putin has torn the Minsk agreement into shreds.
Manis, good morning. What a day. And strategists that Bloomberg have been speaking to have just outlined the uncertainty and the lack of transparency about what is going on around the border with Ukraine and how to position around this. We saw losses across the European stocks of around 1.3% yesterday. US markets have closed for President's Day. That'll change today. And we're looking at the US futures pointing significantly lower, as you highlighted. We're opening up, of course, the first few seconds of the trading session here. You're seeing losses of 2.5% over in Spain, down 200 points. The CAC is lower by more than 2%, and the FTSE 100 here in the UK lower by 1.5%. We can think about the Fed, we can think about central banks, what's happening in China, an additional crackdown on technology, but it is all about the geopolitics and that risk-off sentiment that is filtering through these markets. Let's switch it on then, cross-asset, and see how things are shaping up as some of these havens get a bid, and as we look to the open of the trading session, the first day of the week for the US. Looking at losses of more than 1.8% on the S&P E-mini futures. The US 10-year is bid. Yields are down by more than 6 basis points at 186. Brent also in focus, $97 a barrel. So you're looking back to those $100 a barrel. We had Vitol and the CEO yesterday saying that is very much in play now. And of course, the geopolitics just building on the fact that you have a lack of capacity and a lack of investment in the oil space. Currently up 2.5% on Brent. Gold is bid again, back above $1,900 per ounce. Watch the yellow metal. Is it in a breakout phase now? Let's switch it on and look at how the assets are playing then across the Russian space. We've seen pressure, of course, on the ruble, on, of course, the banking sector, finance. We're waiting for the details of the EU's response, sanctions later today. That is the expectation. So you've got the broader index in Moscow down almost 15% over the last 2 days. The 10-year Russian yield is just soaring. Sberbank just as an indicator of the financial sector and concerns about additional sanctions there. Got the Europeans later today, as I said. We had the US putting some sanctions in place on those specific territories yesterday, and Sberbank down 23% again over 2 days. The ruble continues to be under pressure, breaking through 80 per US dollar. That is the impact across the Russian space. We have a chart that I want to bring to your attention because, of course, it's the geopolitics, but it overlaps onto what's happening around the central banks. And we heard from the Fed official, one Fed official, suggesting that, look, 50 basis points is still in play for March. We have the PCE data that's going to come out on Thursday that will give us some more details in terms of the inflationary pressures. There's additional inflationary data that comes out before that meeting. But you just look back to February the 10th or thereabouts, and you had the markets pricing in 50 basis points. That is down now to about 30 basis points, or 1.2 times 25 basis points along this chart. The blue line is the S&P futures. The white line is the number of 25 basis point hikes that are priced in by these markets. The markets are not pricing in 50 basis points at this point, but the door remains open according to a number of Fed officials. We're waiting for that additional data, Manus.
Absolutely, and I think Michelle Bowman's language overnight is where the Treasury market will flip to if there's any kind of progress or de-escalation in the Ukraine-Russia. Michelle Bowman favors a forceful action. Lots of notes in my inbox this morning about the quad of risks. Global equities from a record high of, 122 trillion to 112 from their peak. So we've a lot of headwinds in front of us, Tom. Let's see what these sanctions are if and when they're announced by the US and their allies. Tom McKenzie in London on the markets. The US and the UK governments are set to announce those sanctions on Russia today. And while the EU leaders discuss how to react to a fairly dramatic escalation in tensions, that's after President Putin recognized two self-proclaimed separatist republics in eastern Ukraine.
I consider it necessary to take a long overdue decision to immediately recognize the independence and sovereignty of Donetsk's People's Republic and Luhansk's People's Republic. I'm asking the Federal Assembly of the Russian Federation to support this decision and then rectify treaties of friendship and mutual assistance with both republics. We demand for those who took over and retained the power in Kyiv to immediately stop combat activity. Otherwise, the responsibility for continuing the bloodshed will lay on the shoulders of the Ukrainian regime.
Well, the decrees were signed by Putin. They include an order to send the Russian president what he called peacekeeping forces into the regions of Donetsk and Luhansk. The move potentially moves Russia closer to a direct confrontation with Ukraine. Moscow denies it plans to invade the country. So let's bring in our reporters from around the world. To Moscow, we have our editor, Jake Rudinsky. In Brussels, Maria Tadeo. Our markets editor, Christine Aquino, joins me. So we've lined everybody up. To Moscow, first of all, Jake, Putin's end goal here, I think we just listened to Alexander Stubb with Anna. He has superpower nostalgia, but what do you make of the last 24 hours? We will get back to Jake in just a moment. Let's get to Maria. She's got the European reaction. Maria, we've just had a conversation with Alexander Stubb, and it is about the seriousness and the gravity of what has happened in the recognition of these two separatist states. What is Europe's reaction? Ursula von der Leyen, I know she's been tweeting.
Well, you know, Manus, what you need to do here, of course, is take a view of the past 48 hours. In the space of essentially 2 days, Vladimir Putin has stationed troops in Belarus and yesterday signed this decree recognizing two breakaway republics. For European officials, that speech yesterday, which they described was a rant, it was a monologue. They thought it was horrific. It was horrifying. The idea that Vladimir Putin insisted Ukraine is not a real country. As a state nation, it doesn't exist, is now filled with corrupt politicians and Nazis, by the way, that are trying to hurt Russia. The language here doesn't point to a man who's looking for de-escalation. Now, in terms of where we go from here and the sanctions that we potentially could be getting, we know that European ambassadors are meeting in about, I would say, 30 minutes. Then, of course, there will be a summit in Paris. The top European diplomat, Borrell, says that this package of sanctions is ready to go for leaders to approve. But the question is just how big and how hard will they hit Russia? And I can tell you, Manos, there is already debate here as to did Vladimir Putin really invade? Is this an invasion? Is this an aggression of Ukraine territory? And the key here, of course, is that he is saying he's not annexing anyone. This is not Crimea 2014. What he says is that the Russian Federation, as a state, is recognizing two other new republics. So that is the problem here in the technicality. We do know, however, that behind the scenes there are divisions between the Western European countries and the Eastern European countries, with the East saying there needs to be big sanctions already from the get-go today.
Indeed, although we saw the Ukrainian Prime Minister urging calm, And to that end, Ursula von der Leyen is saying that in a tweet that it's a blatant violation of international law and that the EU will react with unity and firmness, a determination and unity. We'll see how that plays out through the morning. Maria's on the ground there for us in Europe. To Moscow, Jake, what is the end game for Putin? As Maria pointed out, a very clear nuance there between this is different to Crimea. This is not annexation. This is recognition of two satellites.
Right, but as she mentioned, Putin had this hour-long rant yesterday in which he basically said that Ukraine is a mistake that was created by Russia and doesn't really have any historical legitimacy. So when you look at his really aggressive words, you wonder if he's going to be satisfied with just moving troops into these breakaway regions that were already basically Russian protectorates, or does he have his sights set on something bigger? Let's not forget that there are about 150,000 Russian troops surrounding Ukraine right now that could be poised to move further. It's never when you have troops along a line of conflict, Russian and Ukrainian troops along a line of conflict, it raises the stakes and allows, a lot of things could go wrong that would escalate the tensions or lead to open fighting.
Okay, Jake, we'll see you through the morning. To Christine, the Russian-Ukraine conflict, as Tom said, is playing out across markets. We're looking credit default swaps ratcheting higher, equities under pressure, and financials are taking this strain. From a global perspective, havens are strong and we're in a risk-off mode. Take me through what's most prescient for you.
Well, Manus, of course, as expected, we are seeing the biggest impact in Russia's own markets. The ruble and its equity indexes both underperforming globally against its various peers. But as you mentioned, the impact is very much widespread. We're seeing it reverberate across equity markets. We're seeing it reverberate across the various havens here. In particular, the U.S. 10-year yield very much backing away from that key 2% level that everyone's been seeing as a pain threshold of sorts for risk assets. And similarly, we're seeing this play out in terms of expectations for rate hikes as well. We're already seeing expectations for ECB rate hikes getting pared back very much. So we're now only seeing a 125 basis point rate hike priced into markets at the moment for the ECB. And really, the big question that we're asking a lot of investors and strategists are these tensions something that could potentially overshadow all the other catalysts that we've seen for markets this year, primarily this expectation that most of the world is going to be moving toward tighter policy? I think that's something that's going to be very much on the radar for a lot of investors today and in the coming week.
And of course, there are other market catalysts. It's the language from the Fed, from Ms. Bowman overnight, which talks about a preparedness for perhaps more to come there. So talk me through the other primary rate hike drivers in the market this morning.
Well, Manus, of course, as you mentioned, we're going to be getting some key data out of the U.S. this week. And like you say, it's very key to determine how those rate hike expectations for the Fed are going to go. And this is something, again, that would nearly slow those expectations and perhaps put a bit of a speed bump. Or is it something that could really turn around that direction higher in yields that we've broadly seen since the start of this year? And definitely looking to more comments from the Federal Reserve as well. I think we're going to be hearing from a bunch of them as well as other central bank policymakers, both from the ECB and the BOE over the next couple of weeks, all heading toward those key rate decisions starting in early March. And again, I think really the key thing to watch out for is how much of these Russia-Ukraine tensions will really feed into the broader expectations for tighter policy. And is that something that could potentially reverse all the tightening that is currently priced into markets?
Okay, thank you so much to the whole team. To Moscow, Jake Ruditsky, Christine Aquino in London, Maria Tadeo in Brussels. The nuances are important. Quick flash of what's coming up. We have the global market map. Oil is above $98 in London. We're seeing a significant reassessment of risk. 5-year paper in Russia has now exploded up by 118 basis points. You are looking at a pretty substantial repricing pricing of risk. The 5-year CDS has blown out by 1/3 of 1%, and you are just seeing an explosion higher in terms of WTI, up 4 1/3% at $95. Equities are lower as Russian MOEX down by 5 1/3%. This is what's coming up. Goldman Sachs say that 50% of the risk of conflict is in this market scenario already. Does my guest agree? This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Welcome back to the Open. We are just 15 minutes into your trading day this Wednesday as we reassess risk across the board. European stocks going through a 4-month low, down 1.25%. Germany down 1.9%. I draw your attention to the bottom of the board. European gas futures, we rallied as much as 13% on the Open, up 7.5% at the moment. We're readying for sanctions. What will those sanctions be? Will Russia weaponize their gas supplies? Some would say they've already done that. This is the chokehold that Russia has on Germany in terms of 40% of its exposure to its gas needs from Russia. Outright conflict in Ukraine, punitive sanctions, could send the S&P 500 down by 6%, according to Goldman Sachs. That's in the worst losses to come. More in Europe and Japan, down by 9%. This is their worst-case scenario for the strategists. They say that the ruble could tumble another 10%. That would invoke a 13% rally in oil. All of this is benchmarked from last Friday's close. Let's go head-to-head. JP Morgan Asset Management, Goldman Sachs square up. Karen Ward has the job for JPM Asset Management. Karen, it's a bit unfair, but this is a very serious day when we really do need to reassess where we are with risk. In the eye of escalation, on a day like today, when you see these markets move, give me your first assessment to the energy complex, which is quite literally exploding higher. Crude up 4 1/3%. Let's start there.
Yeah, absolutely. Well, that is the starting point, as you say, to all of our thought process about how this is going to affect the global economy and, in turn, stock markets. The response today is a little more muted than I might have anticipated, actually. I think that does suggest that a full escalation is not in the price. But you're right. I think the way in which we need to think this through is, where do energy prices go? How much money does that take out of the pocket of consumers? How do policymakers then interact with that? Do they cushion the blow? Do the central banks not hike rates? Do governments provide subsidies to consumers to keep them spending? And then we can start to think about how that's going to affect growth and what the stock market should be doing. But you're right, the starting point is energy.
That's a heck of a decision tree analysis. That's a huge decision tree analysis. So let's take it up to the top of the decision tree analysis. An escalation of risk, invasion. We don't know what that escalation might be. I've seen various notes on real escalation of an incursion into Ukraine, a full incursion into Ukraine. What might that do to the upper bandwidth on oil and Brent in the first instance?
I think in that scenario, you could certainly see $120 oil. And I think what's really important for us to remember is this is not just oil. The importance of Russia in the global supply of many commodities, global fertilizers, for example, and how that affects global food prices. So I think we need to understand the starting point for the supply chain for a much broader range of the global economy purely than oil and gas. So, certainly higher energy prices from here, at least another 10% in that scenario. That's the starting point.
And on the softs, I mean, wheat, Russia is responsible for 25% of the global wheat exports and 20% of the corn exports, so which again double feeds back into the narrative of inflation. Look, escalation and inflation are probably hand in hand. But let's talk about the central bank reaction function, Karen. Still, the market thinks 25 basis points in March. The rates traders have not been moved by this escalation overnight. How much of a blockage would an escalation be to the Fed? JP Morgan calling for 9 hikes. Your own house calling for 9 hikes in a row. On the spectre of escalation, is that still remotely possible?
So the way the central banks will be thinking this through, or the playbook for central banks whenever they're facing a cost shock, is they'll say, is this in turn going to damage demand, slow the economy, and therefore bring down inflationary pressure such that we don't need to act? Or is there a risk of what they call second round effects? That is, rising wage pressures, which then add to costs and add to inflationary pressures. Are inflation expectations becoming de-anchored? Are they losing their credibility? And I think what the market is saying at the moment is there are risk of those second round effects. This is not a cost shock that's hitting weak economies. We are seeing, very low levels of unemployment. We are seeing wages pick up because companies are finding it hard to recruit and they're having to raise wages. So those risks of the second round effects, I think, are there for the central banks. It does differ by region, and hence you've got the ECB and some of the committee members there saying, well, we're not so worried about those second round effects. The labour market doesn't seem so very tight that we should be concerned about a wage price spiral, so we can sit with policy a little longer. In the UK and the US, I think the situation is different. The risk of those second round effects are more significant, and that's why at the moment the market is saying this may be a cost shock, but it's still something the central banks are going to have to react to. I think that's on these energy prices. We saw that scenario that you and I were just discussing, where we get another 10%, then I think we start to tip into that balance of this is going to be destructive on its own, and they would not want to be compounding that damage.
Okay, that's perhaps where the trigger comes in. Karen, stay with me. EMEA market strategist at JP Morgan Asset Management on the risk of escalation. Coming up on this show today, we're going to take you through all the implications for HSBC. I caught up with the CFO a little bit earlier on. The stock's down 1.25%. Again, they take a hit on some of the Chinese property assets, but the buyback is there, $1 billion from the management team at HSBC on buybacks. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
We certainly agree with the consensus view that we're going to see a considerable number of rate rises happening over 2022 and into 23, both in the US and also in the UK.
Ian Stevenson, the CFO of HSBC, with me talking about rates and his outlook, the tail that wags the risk dog in the longer term. JP Morgan Asset Management. I hope I haven't paraphrased too badly. Karen Ward is the Chief EMEA Market Strategist. Karen, so there's Ewan's take. He's putting forward his outlook in terms of what NII would be for the bank on rate hikes. Just take Ukraine out of the equation for me for a moment. You know, if we find an off-ramp, give me your scenario for risk for the rest of the year.
It's good. As we came into the year, we're expecting a very strong consumer bounce back post-Omicron. As we see it, consumers have a good balance sheet, they've got cash in their pockets, they've got high levels of savings, good wealth effects, jobs market's fantastic, wages are going up, and there's that desire to get back to normal, all of which, in our view, fuels quite a decent consumer recovery. And we're getting glimpses of that in the data for January. We had strong retail sales numbers. We had UK PMI for the service sector yesterday, which was much higher than expectations. I think that desire to get out and spend is very, very strong. Now, energy prices are eating a little bit.
Thank you. We've got to leave it there. Karen Ward will absorb that risk outlook from JP Morgan Asset Management.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open. We're 30 minutes into the start of equity trading, cash equity trading. Here are your top stories. Escalation. President Putin recognizes two breakaway republics in the east of Ukraine and says Russia will deploy what he calls peacekeeping forces to the region. The White House condemns the move, promising sanctions. Emmanuel Macron decries the breach of Ukraine's sovereignty. President Zelensky urges calm. Markets recoil. Global stocks tumble. Treasuries and the dollar bid. The Russian ruble slumps. Brent crude passes $99 a barrel. European stock markets are reassessing all levels of risk. Sanctions are coming, we understand, from the United States and their allies. We don't know what shape and form exactly those will be. The DAX down 1.7%. Energy complex is ratcheting higher across gas and oil. Stocks 600 down over 1%. Let me show you what's going on in the GRO, the group ranked returns. In other words, the actual industry groups that are underperforming today. It is autos, banks, and insurers that are the laggards. The only alpha, the only green on this screen are the energy complex within the stocks 600. And I can tell you that's because of the price of oil, nearing $100. London, Equinor, Galp, Shell, BP, Repsol, all on the up. London Energy up 4.25%. So the specter of escalation has us in definitely a risk-off tone across these markets. The US and its allies are preparing new sanctions against Russia, as Vladimir Putin announced he's recognizing two self-proclaimed separatist republics in the east of Ukraine. Now, the Russian president has ordered what he calls peacekeeping forces to be sent to those regions.
I consider it necessary to take a long overdue decision to immediately recognize the independence and sovereignty of Donetsk's People's Republic and Luhansk's People's Republic.
There are now absolutely no reasons for chaotic actions. We'll do everything to keep it this way in the future. We'll stick with the peaceful and diplomatic way. We'll only walk this way. We are on our land, and we are not afraid of anything and anyone. We don't owe anything to anyone. We won't give away anything to anyone. We are confident in this.
I'm asking the Federal Assembly of the Russian Federation to support this decision and then rectify treaties of friendship and mutual assistance with both republics. We demand for those who took over and retained the power in Kyiv to immediately stop combat activity. Otherwise, the responsibility for continuing the bloodshed will lay on the shoulders of the Ukrainian regime.
This is plainly in breach of international law. It's a violation, a flagrant violation of the sovereignty and integrity of Ukraine.
Just now, my Russian counterpart made assertions without evidence that demonstrate their efforts to create a pretext for conflict. And it is alarming. It's revealing and it's shameful.
Joining me now, my guest, Oksana Antonenko, Director for Global Risk Analysis at Control Risks. Oksana, welcome. How would you describe the escalation?
Well, we are really now entering, a most dangerous part of the conflict. I think President Putin at the moment has a choice whether he stops at this recognition, which of course, on balance, perhaps gives him more costs and more losses than wins, or he pushes on towards, either limited or full-scale invasion of Ukraine. And at the moment, we still do not know whether he has made this choice. and therefore we're seeing certain pause, with the Western policymakers looking at what is the spectrum of this escalation. But of course, we from our side foresee and forecast that this escalation is going to follow.
When you look at the playbooks of Crimea and other scenarios that you can assess, do you think that there will be an invasion, a full-scale, large-scale invasion of Ukraine? What is the risk of that?
Well, we still assess that the risk of large-scale, full-scale invasion of Ukraine, including, capital Kiev and taking the territory of entire Ukraine is low, simply because it is both militarily and politically is going to be very risky for President Putin. It's going to involve very large casualties, inevitably massive sanctions, and retaining and controlling the territory of a very large state, which has, large military, is going to be very difficult. I think most immediate question is whether he decides to recognize and retain those de facto republics in their current borders, or he pushes to take over control of the rest of those regions, which, at the moment, separatists only control 1/3 of the administrative territories of Luhansk and Donetsk. And this is probably where he is likely to push in the coming days. And of course, that will involve, even greater Russian military presence in Ukraine, something which is likely to trigger, larger.
So what scale, with that in mind, with that scenario that you've just painted to me, do you think that we see, what scale of sanctions do you expect today? And do you see them as being staged? Stage one set of sanctions today to see whether there begins an off-ramp and perhaps an evolution of those sanctions?
Yes, absolutely. I think the West has planned it, very well. Both the United States and the European Union are looking at escalating sanctions gradually and keeping the sanctions leverage to deter, to raise the cost for President Putin with further escalation. So far, of course, we have not seen.
Well, what is a painful sanction, Oksana? The one thing that I am struggling with is to understand what a real penal sanction would be on Russia to get Putin to stop. Define that for me.
Well, I think it depends who you are in Russia. If you're a private Russian company, listed on London Stock Exchange, if you're a Russian exporter, integrated in the global markets, I think the sanctions that we will see today will be extremely painful. We're already seeing Russian stock market tumbling, ruble, appreciating, the Russian debt is becoming more costly, and Russian companies will be cut off and will not be able to borrow in international markets. If you're President Putin, you have a different kind of calculation. He said very clearly that he doesn't see any sanctions as a threat to Russia. He accumulated 600 billion of reserves. He sees the sanctions giving him rallying around the flag effect. And he thinks that he also has leverage. He threatened potentially to cut off energy supplies to Europe. He certainly can introduce, capital controls. He can, seize, Western assets within Russia. He can do many things from his side. So if he's President Putin, he's not afraid of any sanctions.
Well, he's not afraid, and that certainly comes across very, very clearly in terms of these actions. Yesterday morning, we were talking about a potential détente and talks, and here we are at a quasi-full escalation. You talk about him not being afraid. The US, the UK, Europe together, how united are they in your view?
Well, they certainly are much more united than they've been in 2014 during the illegal annexation of Crimea and the first war in Donbass. So they put forward a very clear political unity. The question is now when the sanctions would have to be applied. And of course, the cost of sanctions are going to be distributed unevenly. The Europeans in particular would have to pay a much higher price for those sanctions. Whether they will decide to impose particularly, I would say, there's a question mark over any sanctions in the energy sector because Europe is very vulnerable here. So I do not foresee Europeans going for any energy sanctions. Even the Nord Stream 2 at the moment, given the kind of a limited scale of Russian action in Ukraine, perhaps something which is not going to be taken entirely off the table. At the same time, Europeans and Americans are united in talking about financial sanctions, cutting Russia off the financial markets, targeting Russian banks. So I expect that very much to be unified action. And of course, targeted individual sanctions.
Oksana, isn't this the whole point, though? Isn't this the whole point, though? And I am not well enough qualified to define the risk parameters around this, but you may be, which is Europe, the US, etc., fear the weaponization of oil and gas. We've already seen the pain in the gas market and the energy markets, but the jugular with Russia is the 7 million barrels of oil that they export. Where does the US, UK, and Europe need to strike